My name is Raquel Rose. This is Chapter 10. I'm in Group 1. First question are, what are examples of current liabilities? It's a debt that a company pays within 1 year, such as a note payable, account payable, unearned revenue, and accrued liabilities, which are taxes, salary, wages, and interest payable. The journal entries are for a note payable, you debit cash, credit note payable, and then at the end of the month you debit interest expense and credit interest payable, and then you debit notes payable and interest payable and credit cash. The sales tax payable, you debit cash, credit sales revenue, and sales tax payable. And for unearned revenue, you debit cash and credit unearned revenue, then you debit unearned tax revenue and credit ticket revenue. And then for payroll and payroll taxes payable, you debit salary, wages, expenses, and credit all the different taxes payable. What are the major characteristics of bonds? They're secured and unsecured, convertible, and callable bonds. The journal entries to account for each of the following situation is for an issue bond at face value, you debit cash, then credit bonds payable. Then you debit interest expense and credit interest payables. Then you debit interest payable and credit cash. Then you do the opposite for the issue bond at discount. You debit cash and then discount on bond, and then you credit bond payable. Issue bond at premium, you debit cash and bond payable and premium on bond. And then to redeem at maturity, you debit bond payable, credit cash, and then to redeem bonds before maturity, you debit bonds payable, premium on bond, and loss on bond, and then you credit cash. The journal entries to account for long-term notes payable is debit cash, credit mortgage payable, then debit interest expense and mortgage payable, and then credit cash. So liabilities are reported on the balance sheet under current liabilities at the top of the balance sheet. Thank you.